A terrible day of trade. We saw markets trade under pressure right from word go this morning. The Nifty and the Sensex now extending those losses, at one point even trading sharply lower and crashing over 1,000 points. Currently, of course, we are seeing the levels being volatile, but the Nifty and the Sensex clearly giving up those levels. The Sensex has already given up the 73,000 mark. BSE and small cap index as well as the mid cap index really crashing the most. The BSE small cap index even crashing as much as over 5%. Now, NDTV has been speaking to analysts through the day, and what many are telling NDTV is that, look, liquidity was overflowing, as well as the fact that valuations have really been stretched as far as the small cap and mid cap space is concerned. However, all sectoral indices, in particular metals, realty, energy, trading sharply lower. And to decode this further, we are joined by Ambrish Baliga, market expert. Thank you so much for joining us. What's the, of course, we have seen markets trade under pressure. We do know the fact that valuations have been stretched for this sector, mid caps and small caps in particular. But what really is the reason for the markets extending those losses?
No, see, first of all, the valuations were expensive and the stocks continued to move up because of liquidity, because the people were making money, so they were putting in more funds, and because of which the stocks were going up, and it was not due to valuation. But now, in the past couple of days, in fact, the past 1 week, we had seen that the regulators were worried about the valuations, and I mean, they have been talking of the froth in the market, and that has percolated down to even the mutual funds, who have started restricting fund flow into the small and mid-cap funds. I think that is what is playing out. And once you see a certain amount of correction, for example, like the small cap index, we have seen more than a 5% correction, which actually means that a couple of these small cap stocks would have corrected maybe 20, 30%, 40% in some cases. And I think that has created some amount of panic among those who had seen only profits till date in the past so many months. I think the first signs of huge losses, I think that has started causing panic. And when you have this panic, you stop investing further. So the liquidity which was driving up the stocks, the liquidity has started drying up. And I think that this could be just the beginning. We could see some more correction from here as the liquidity dries up more.
Right, and for those tracking the markets very closely, your message to them going forward in the days ahead, because like you said, these could be volatile times, and you're also someone who's tracking the market very closely. So your message to all investors really who are tracking the markets very closely, the movement really on the mid cap and the small cap space very, very closely, as well as sectors at large.
See, I mean, my message to the retail investors would be, if you are still making good money, or even some losses in the small cap and the mid cap stocks which you have bought recently, I think it's still time to book and get into the large caps, because they are the most stable stocks, and that is where the valuations are still not too expensive. So better to park the money in large cap stocks and the stocks you understand well, and do not invest based on tips.
All right. Thank you so much for sharing your thoughts and your insights. We will, of course, keep tracking the markets very closely.